Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. It's Monday, 22nd of June, 2026. I'm Mark Gardner. So, look, it was closed on Friday night in the US. We had Juneteenth and cash markets were closed. Essentially, obviously nothing to see here in terms of the heat map, but we basically closed on a pretty cautious note leading into the weekend. US-Iran talks open at Bürgenstock in Switzerland on Sunday, and there are some rumours floating around that essentially we had Iran storming out. We've had rumours floating around that the Israelis have hit Lebanon over the weekend, which is obviously part of the non-negotiable deal, etc., etc. So still a bit up in the air, and we're showing US tech down in the futures down 1% this morning. The S&P down 0.62, and I think as well oil showing up sort of 1 to 1.5%. Actually, as it stands right now, oil's sitting at up 2.5%, so it's rallied about 1% in the last hour. As of 9:35 in the morning here in Sydney. So look, here's overall the deal. There's 14 articles in here. The high chance of getting past is the immediate and permanent end of the war, the mutual sovereignty and non-interference, 60-day negotiating window, lifting of the naval blockade, 30 days, the immediate Iranian oil export waivers, medium possibilities of getting through, the Strait opening, the $300 billion reconstruction plan, full sanction removal, no nuclear weapons, nuclear status quo, compliance oversight mechanism, and release of frozen assets. And then a binding resolution from the UN is low. It's the only one that is low, and then the sequential trigger for final talks. So, the red column probably a lot bigger than the green column, and we'll just sort of see what happens as these general talks progress. From where I can see where the market stands at the moment, obviously oil's back around levels which was only probably about $5 above where it was really leading into this crisis, and many of the oil companies are basically back to where they started as well. The risk reward here, I think, is certainly to the upside for energy, and I think it's probably not the worst thing in the world to be, potentially hunting around for some value in that, particularly as a hedge, because we are at extended levels in the US equities market, particularly on the back of the stocks, where we are. The market is very much not factoring in any risk to the downside in terms of if these negotiations blow up. And the wild card is Israel, of course, because if they're not on board, this doesn't work. And I kind of get the feeling that Iran's using that as a bit of an easy way out, to be honest. But if the US is going to go anywhere near to this 14-point agreement, I dare say they'll run towards them rather than away. I think they've sort of proved their point. They get some assets unfrozen. They get some money to rebuild and things like that. So, and then, the potential to still cause a little bit of havoc and charge some tolls leading into the end of the 60-day ceasefire that will, that if they don't get a proper agreement up and running. So I think they've proved their point as it stands. And, I'm not entirely sure that they're, as much as, you don't want to overreach in a negotiation and go for things that essentially you're just never going to get, because I highly doubt that beyond these 14 points, you're going to get much leeway either way. So, but look, that's just me. The Iranians seem to be pretty clever when it comes to this stuff, and I don't think they're silly enough to to overreach. So hopefully we'll see a resolution. Obviously, higher rates has really dented these precious metals. They're getting pretty smacked up here at the moment. We've got hawkishness from basically every central bank in the world, the EU or the ECB, the US, and Asia Pacific as well, just due to inflation. As I say, the crude seems to be the trade that sticks out a little bit to me at the moment, in terms of it's already done it's already done a fair bit of the downside work, and it doesn't need, and we just need someone to walk away from the table or throw a tantrum, or reliably for Donald Trump to tweet some sort of threat, which he's already done over the weekend, or for Netanyahu to not really buy into this and just decide to start bombing again. So, I think your downside's probably anywhere from 5 to 10%, but your upsides could be anywhere to 10 to 25%. So, having a really good look at those is probably not the worst thing. If you sort of think this equity market's going to rally, it's probably not a bad hedge. I wouldn't have thought. Whether you do futures or whether you have a look at the likes of some of those US firms which are trading at mid to high single digit PEs and pay an incredible dividend like Chevron. It's a good opportunity to be diversifying some of your risk, either if you want to hold on to the rest of your portfolio, I suppose. This week's some pretty big stuff in particularly in Australia. Not much in terms of the global reporting, except for Micron, which is on Thursday. That'll be, I assume that'll be Friday morning, or it may be Thursday morning actually. But I'm having a look here. I'm just squinting my eyes. Yes, it is. It's Thursday morning, Wednesday night. That'll be massive for that SOX, or Philadelphia Semiconductors trade. In terms of domestic stuff, we've got CPI and on Wednesday. We've got employment on Thursday. We've got core PCE price index and final GDP on Thursday in the US, but there's sort of final revisions, those, and there won't be too much volatility. We're more so looking out for volatility in the next one. In next month's, they do release those as advanced, revised, and final. There doesn't tend to be a lot of movement in the final. Michigan sentiment on Friday night might do something, but realistically, for Australian investors, we're going to be looking at basically, these inflation numbers and these employment numbers, because the RBA did not rule out further hikes if inflation was higher. And we would have to do a lot with the analysts basically saying that they're done. We'd have to do a lot of backpedaling if that was, if we do get those larger numbers. Metcash reporting some earnings today. We'll see a bit of a knock-on effect from BHP and see what the analysts' expectations are on BHP after the blowout of that costing in that CapEx, and in that Jensen project CapEx for the potash, but and then obviously Micron will set the tone for that Philadelphia Semiconductors index on Thursday morning. Now that's going to have to be quite the report to head higher, because that thing's been on an absolute tear, and I doubt that albeit that memory prices have gone through the roof, etc. I think analysts' expectations are going to be pretty lofty, and we'll see what happens, because it certainly has had quite the rally, and whether what everyone's talking about can materialise in 3 months is another matter altogether. You can grab our most recent webinar, the Software Survivors 2.0. Just scan the code, and you'll get some of those SaaS stocks there. And if you'd like as well, you can subscribe to we did Anthropic and OpenAI analysis on Friday's podcast, Bulls versus Bears, our weekly podcast with Kai Chen and Jonathan Takadina. And did a little bit of a deep dive into that, and had a bit of a chat around, which ones we buy, etc. So you can just go to the podcast part of our website and subscribe to either of these. If you can, and you enjoy this one, go to either YouTube, Spotify, or Apple Podcasts, or most of your favorite podcast platforms, and you can subscribe to either the Morning Call or the weekly Bulls versus Bears. Have a great day, everyone, and we'll speak again tomorrow.